Pain trade isn't the business of supplying torture equipment to nasty regimes, but rather a handy way to frame the question of what investors as a whole are positioned for, and so what move in the market would hurt them the most. The move we've just had is the equivalent of being sent to a CIA secret prison. 6 days of extreme pain for those who had bought into the idea that the world was heading for a future of secular stagnation, that China's troubles would bring deflation to everyone, or even that a global recession was becoming increasingly likely. The scale of the reverse is shown here, tracking the performance over 6 days of a standard momentum strategy. That is, a strategy where a trader buys the best performing shares over the previous year and sells short the worst performing in the hope that the trend will continue. Well, the trend didn't continue, and it's been the worst 6 days for this momentum approach since the aftermath of Lehman's failure back in late 2008, early 2009. And even before that, one that was only relatively rarely seen at these levels. Now, today's brought some relief, but probably only because those who've been trying to resist the torture of watching stocks they hate leap in price have finally broken and be forced to buy into them, creating a new pain trade. Some of those which had rebounded the most in the last few days are now dropping again, with, for example, Glencore down 6% today, or Portuguese bank BCP off 8%. Now, Andrew Lapthorne at SocGens provided a handy way to look at the past week's rebound before today's partial reversal of the reverse. This chart divides the market up according to how far stocks had fallen over the last 12 months, ranked along the bottom here with those that fell the least at that end and those that fell the most at this end. Each bar shows how big the rebound in those stocks was in the last week, split for emerging markets in the red bars and developed markets rather in the blue bars. Now, anyone lucky enough to time their purchase of what had been the absolute worst performers had a lovely time as everyone else tried to escape. You can see these extreme returns, almost 25% in 6 days for the top 20th of the market there. Now, that group's dominated by oil and gas companies and miners, although it also includes a few hard-hit individual names, companies like BCP, Volkswagen and Win Macau, provider of gambling services to rich Chinese. Now, these kinds of wild moves in markets tell us that traders didn't really believe the outlook was as gloomy as the prices suggested at their worst, and they'd overextended themselves on their negative bets, which is why the pain was so extreme when it reversed. Now, there's never a time when economic forecasts can be relied on, but occasionally investors come to realise that. Now's one of the times when investors really understand the uncertainty out there, and it means that we can expect even more volatility in the markets than usual. But at the very least, the likelihood is that the mood swing is now done. That giant reversal, the pain trade is over. The fundamentals of profits and economic data may be able to reassert themselves for a while before the next pain trade kicks in.